Most traders quit exactly 3 trades before their edge would have proven itself. Not 3 months, not 3 years, 3 trades. They're standing at the finish line, exhausted, bloodied, convinced the race is rigged, and they walk away. The next person who picks up their exact strategy, their exact plan, wins. Not because they're smarter or more talented, because they stayed 3 trades longer. The cruelest thing about trading isn't that it's hard. It's that the hardest moment, the moment that feels most like failure, is actually the statistical turning point. You're not failing when you want to quit. You're succeeding, and success feels exactly like breaking. That's the trick nobody warns you about. The edge reveals itself right after the moment when staying feels impossible. And I know that sounds almost cruel to say to you if you're in that place right now. If you're in that moment where you're seriously considering walking away from this whole thing, but I need you to hear this because it's the truth that nobody told me when I was where you are, and it cost me years of unnecessary suffering. The truth is that you're in the darkness right now. You've been working at this for months, maybe years. You've invested time and money and emotional energy that you can't get back. And you're seriously considering walking away, not because you consciously sat down and decided that trading isn't for you based on careful analysis, but because the pain of continuing feels greater than the pain of quitting, because you're exhausted from the emotional volatility, the financial losses, the feeling that everyone else figured this out faster than you did, easier than you're finding it. The question burning in your mind right now isn't even, how do I get better anymore? It's, should I even keep trying? And that question, that specific question, is what I want to talk to you about today. Not to motivate you, not to give you some rah-rah speech about believing in yourself, but to show you what's actually happening in that moment, to show you why the urge to quit isn't what you think it is, to show you that the traders who quit and the traders who succeed go through the exact same experiences, the same losses, the same doubt, the same exhaustion, and the only difference is duration. How long they stayed in the discomfort before one group left and the other group broke through to the other side. See, you think giving up is a failure of character. You think it's proof that you're not cut out for this, that you don't have what it takes, that you're missing some essential quality that successful traders have. But that's wrong. That's completely wrong. Giving up is a failure of perspective. It's a measurement error. You're measuring progress on a timeline that doesn't match how skill development actually works in trading. You're expecting linear improvement in a domain defined by probabilistic outcomes and psychological metamorphosis. You're looking for evidence of progress in places where progress doesn't show up for months or years. And when you don't see that evidence, you think you're failing. But you're not failing. You're just measuring wrong. Every other video you've watched probably told you to just push through, to stay disciplined, to believe in yourself. And that's not help. That's platitudes. That's someone telling you to do something without explaining how or why, or what's actually happening in your psychology that makes it feel impossible. I'm going to show you why the urge to quit isn't a warning sign that you should leave. It's a developmental stage that every successful trader passes through. It's not deviation from the path. It's part of the path. It's curriculum, not failure. The moment you want to quit most desperately is the moment your psychology is being rebuilt at a fundamental level. And if you leave during reconstruction, if you walk away while the old you is dying and the new you is being born, you never see what you were being rebuilt into. You never discover what happens on the other side of that transformation. And that's what I want to prevent, because I've seen it too many times. I've seen traders who were 3 trades away from everything clicking, walk away, because they couldn't see how close they were, because proximity looks identical to distance when you're the one walking through it. Now here's the myth I need to demolish right away because it's probably operating in your head right now. You think successful traders never doubted themselves. You think they had some unshakable confidence, some certainty that carried them through the hard times. Absolutely false. Successful traders doubted themselves constantly. They doubted their strategy. They doubted their ability. They doubted whether any of this was worth it. The difference, the only difference, is that they didn't let doubt make their decisions. They learned to operate with doubt present, not doubt resolved. The traders who quit are waiting for certainty before they continue. They're waiting to feel confident, to feel sure, to feel like they know this is going to work. But certainty never comes. You're not supposed to feel confident before you succeed. Confidence is the result of success, not the prerequisite. The successful trader commits fully before feeling confident. They do the work despite doubt, not in the absence of doubt. And eventually, after enough work, after enough consistency, confidence emerges as a byproduct. But it's the result, never the starting point. So I'm not going to motivate you today. Motivation fades by tomorrow morning. I'm going to show you the invisible architecture of why traders quit at specific, predictable moments, what's actually happening beneath your conscious awareness, and how to recognize that the urge to quit is paradoxically a sign you're closer than you think. This isn't cheerleading. This is understanding the psychology of the threshold so you can cross it instead of turning around 3 feet before the finish line like most traders do. By the end of this conversation, you'll understand that your desire to quit isn't evidence of failure. It's evidence of growth. You'll see that every trader who succeeded felt exactly what you're feeling right now, in this moment, reading these words or listening to this voice. And the only difference between you and them is they stayed in the feeling long enough to discover what's on the other side. You'll stop asking, "Should I quit?" and start asking, "What am I 3 trades away from discovering?" Let me start with a story, a metaphor that might help you see what's really happening to you right now. Imagine you're walking through a tunnel, a long, dark tunnel with no lights, no signs, no markings on the walls to tell you how far you've come or how far you have left to go. You've been walking for what feels like hours. Your legs are tired, you're hungry, you're scared. Your eyes have adjusted to the darkness, but all you can see is more darkness ahead. And the worst part, the part that's really breaking you, is that you have no idea how much further you have to go. You can't see the end. You can't see any light ahead. All you know is that behind you, maybe 2 hours back, is the entrance where you started. And you know exactly how far away that is because you just came from there. It's a known quantity. You could turn around right now and be out of this tunnel in whatever time it took you to get this far. Maybe 2 hours of walking back and you'd be standing in sunlight again, breathing fresh air, feeling the ground solid beneath your feet. So you stand there in the darkness, in this moment of decision, calculating. You've been walking for 2 hours into darkness. Maybe the exit is around the next corner. Maybe it's 10 steps away. Or maybe it's another 5 hours away. Maybe this tunnel goes on forever. Maybe it doesn't even have an exit. You don't know. You can't know. But you know for absolute certain that turning around gets you out. The known pain versus the unknown duration. And most people, most traders, turn around. They stand there in that moment of maximum darkness, maximum exhaustion, maximum doubt, and they turn around. They walk back out the way they came, squinting in the sunlight, telling themselves that tunnel probably didn't lead anywhere good anyway, telling themselves it was a smart decision to cut their losses, telling themselves they made the rational choice, and maybe they even feel relief for a while. The relief of not having to walk in darkness anymore, the relief of certainty, even if the certainty is that they're back where they started. But here's what they don't know. Here's the devastating truth that they'll never discover. They were 3 minutes from the exit. 3 minutes. And they walked for 2 hours to get 3 minutes away from breakthrough, from daylight, from everything changing. And then they turned around and walked 2 hours back to where they started. And meanwhile, someone else enters that same tunnel. Someone else starts walking that same path. They feel the exact same exhaustion, the exact same doubt, the exact same fear, the exact same urge to turn around. But they just keep walking. They don't have any special knowledge. They're not braver. They're not more certain that it leads somewhere. They just don't turn around. And 3 minutes later, they're out. They're on the other side. They're standing in a completely different place than where they started, and they didn't do anything different than the person who quit. They just didn't turn around. This is trading. Right now, in this moment, you're in the tunnel. You can't see the exit. You don't know how close you are. You have no way of knowing. Every part of you is screaming to turn back to the known world where you weren't losing money and sleep and confidence, where you had your evenings back, where you didn't wake up at 3 in the morning thinking about positions, where you didn't feel like you were constantly failing at something you're working so hard to succeed at. The known world feels so much safer than this darkness. But you're measuring the wrong thing. You're measuring your discomfort and assuming it correlates with distance from success. You're thinking maximum pain means maximum distance from the goal. But it doesn't. Sometimes, often, in trading especially, maximum discomfort means you're standing at the threshold. Sometimes the darkest point of the tunnel is 3 steps before you walk into daylight. The pain doesn't tell you where you are, it just tells you that transformation is uncomfortable, and transformation is always most uncomfortable right before it completes. The traders who succeed aren't braver than you. I need you to really hear that. They aren't more talented, they're not smarter, they don't have some special psychological makeup that you lack. They just kept walking in darkness a little longer than the ones who turned around. That's the only difference. Duration, not quality. Time, not talent. They stayed in the tunnel while their psychology was being rebuilt, while their nervous system was being recalibrated to handle uncertainty, while their understanding of probability was being downloaded at a subconscious level that doesn't happen quickly or comfortably. And they walked out different people than they walked in. You can't see your own transformation from inside the tunnel. That's the cruelty of it. If you could see yourself changing, if you could measure the invisible progress, you'd keep going. But you can't see it. Nobody can see their own growth from inside the growth. A tree doesn't know it's growing. You are changing every day you show up, every loss you take properly, every time you follow your plan despite fear, every moment you sit with uncertainty instead of impulsively acting to make the discomfort stop. That's all building something beneath the surface. It's accumulating. It's compounding. And you're about to walk away right before you see what you built. But why does it feel this way? Why is this point of wanting to quit so universal, so predictable? What's really happening in that moment? Let me give you another way to understand this because I think this might help it click. Your psychology works like your immune system. When a virus enters your body, what happens? You get sick. You get a fever. You feel terrible. Your body aches. You're exhausted. You can barely get out of bed. And if you didn't know anything about biology, if nobody had ever explained to you how immune systems work, you'd think the sickness means you're getting worse. You'd think you're dying. You'd think something's going terribly wrong and you need to do something drastic to fix it. But actually, the sickness means your immune system is working perfectly. The fever is your body deliberately raising its temperature to kill the virus. The fatigue is your body redirecting all its energy away from normal functions and toward fighting the infection. The aches, the symptoms, the feeling terrible, that's all evidence that your body is winning the fight, not losing it. You feel worse because you're getting better. The symptoms of healing look identical to the symptoms of dying if you don't know what you're looking at. If you don't understand the process, you misinterpret the evidence. Trading does this exact thing to your psychology. When you commit to this path, when you really commit to thinking probabilistically and executing consistently regardless of outcomes, you're introducing a foreign operating system into a brain that's been running on certainty and cause and effect for your entire life. Your old psychological system, the one that got you this far in life, sees probabilistic thinking as a threat. It sees uncertainty as danger. It sees not knowing as a problem that needs to be solved immediately. So it mounts an immune response. It fights back. And that immune response looks like overwhelming doubt. It looks like the voice in your head that says, "This isn't working. You're wasting your time. You should quit. You're not cut out for this. Everyone else figured it out faster. Something's wrong with you. It looks like anxiety before every trade. It looks like depression after losses. It looks like the complete absence of hope. It looks like every reason to quit feels rational, and every reason to stay feels foolish. And if you don't know what you're looking at, if nobody's explained this to you, you think these symptoms mean you're failing. You think they mean trading isn't for you. You think they're evidence that you made a mistake choosing this path. But actually, they mean your psychology is in the process of transformation. The old system is fighting the new system. Your certainty-based thinking, the part of you that needs to know outcomes before taking action, is in a death battle with your emerging probabilistic understanding, the part that's learning to act without knowing outcomes. And the fever stage, the moment where you feel the worst, the moment where every cell in your body is telling you to quit, that's actually the moment where the old system is losing. It's fighting hardest because it's dying. And it uses every weapon it has, every emotional manipulation, every logical argument to convince you to go back to the old, comfortable way of thinking, to go back to the world where you avoid uncertainty instead of operating within it. That's why the urge to quit feels so compelling, so rational, so obviously correct in the moment. It's not your wise self speaking. It's not intuition. It's not some deeper knowing that you're on the wrong path. It's your psychological immune system trying to reject the foreign operating system you're installing. It's your old way of being making one last desperate attempt to prevent the new way of being from taking over. And most traders listen to it. They interpret the fever as failure. They think feeling terrible means they're doing something wrong. They quit during the exact phase where their transformation is happening most intensely, most fundamentally. They walk away right when the old system is on its last legs, right before the new system would have fully integrated and become their default way of operating. The traders who make it, who break through to consistent profitability, aren't the ones who never felt this immune response. They felt it just as strongly as you're feeling it, maybe stronger, but they recognized it for what it was. They understood that psychological metamorphosis is uncomfortable, that you feel worse before you feel better, that the darkest night is right before dawn. They felt terrible and kept going anyway, knowing that feeling terrible is part of the installation process, not evidence that the installation is failing. So if this is normal, if everyone goes through this, what specifically makes some people quit and others push through? What's the actual difference? Let me break this down because I think this is where it gets really practical, where you can actually see yourself in this and understand what to do differently. The first thing you need to understand is that you're measuring progress on the wrong timeline. This is fundamental. This is probably the biggest measurement error that causes traders to quit. You're measuring daily or weekly results. Did I make money today? Did I follow my rules this week? Did I feel confident during this trade? Did I execute perfectly today? And when those measures don't show consistent improvement, when you have a good week followed by a terrible week, when you make progress on Monday and regress by Friday, when you feel like you're learning and then you make the same mistake again, you think you're failing. But skill development in probabilistic domains doesn't work on daily or weekly timelines. It can't. Your edge doesn't reveal itself in short time frames. You could execute perfectly, flawlessly, following every rule of your plan for an entire month and lose money because of variance, because probability means individual outcomes are random even when the series has positive expectancy. You could execute terribly, breaking rules, making emotional decisions for an entire month, and make money because you got lucky. The short-term feedback is completely disconnected from the quality of your execution. The timeline for meaningful measurement is hundreds of trades, months or years of consistent execution. That's when the law of large numbers actually operates. That's when your edge can reveal itself through the noise of variance. Imagine learning to play piano and measuring your progress by whether you sounded good today. Some days you'll nail a piece. The muscle memory will click. You'll play it perfectly and feel amazing. Some days you'll stumble over the same part you played perfectly yesterday. Your fingers won't cooperate. You'll sound terrible. If you measured your progress daily, if you judged whether you're improving based on today's practice session, you'd think you're getting better and worse randomly. You'd think there's no progression. You'd quit because you'd think practice doesn't help. But measure over 6 months, and the improvement is undeniable. The pieces you couldn't play at all 6 months ago are easy now. The techniques that felt impossible are natural. But you couldn't see that daily. The daily measurement is too noisy. Trading is exactly the same, except the randomness is more pronounced, because probability is directly involved. Your execution quality can improve every single day, while your results get worse for weeks. And if you're measuring results instead of execution, you'll quit right before the results catch up to your execution. When you quit trading, you're quitting because your daily or weekly measurements aren't showing the progress you expect. You're looking at your account balance. You're looking at your win rate this week. You're looking at how you felt today. And none of those things tell you what you need to know. What actually matters is, are you building the psychological capacity to execute your edge consistently? Are you learning to tolerate uncertainty without it triggering impulsive action? Are you separating outcomes from execution quality in your mind? Can you take a loss without spiraling into revenge trading? Can you take a win without getting overconfident? These psychological capacities develop invisibly over long time frames. They're not building in a straight line. They're building in a way that looks like no progress, no progress, no progress, and then suddenly everything clicks and they're just there, operational, integrated, and you're walking away before the timeline is long enough for them to manifest in results. You're quitting in the no progress phase right before the suddenly clicks phase. You're turning around in the tunnel 3 minutes before the exit. Here's the paradox that destroys most traders, and I need you to really sit with this because it's counterintuitive and your brain is going to want to reject it. The psychological transformation required for consistent profitability feels exactly like failure while it's happening. You're not supposed to feel good during the reconstruction phase. You're supposed to feel confused, frustrated, uncertain, doubtful, like nothing is working. Those aren't signs you're doing it wrong. They're signs you're doing it right. Think about weightlifting. When you lift weights properly, your muscles burn. You get exhausted. The next day you're sore. You can barely lift your arms. And if you didn't know how muscle development works, you'd think you injured yourself. You'd think you did something wrong. But actually, those symptoms mean you exercised effectively. You're literally tearing muscle fibers, so they rebuild stronger. It feels like damage, but it's development. You feel worse, but you're getting better. The soreness is the evidence of growth, not evidence of injury. Trading does this to your psychology. Every loss you take properly, following your rules, accepting it without revenge trading, you're tearing down an old neural pathway that says losses are personal failures. Every moment you follow your plan despite fear, despite the voice saying to do something different, you're building a new neural pathway that trusts process over feelings. Every time you sit with an open position and don't check it obsessively, you're rewiring your need for constant certainty. And that process is uncomfortable. It creates cognitive dissonance. Your old way of thinking is fighting your new way of thinking. It creates emotional volatility. It makes you question everything. And you interpret all of that as evidence that trading isn't working for you, that you're not cut out for this. But successful traders know they've learned through experience. If it feels easy, you're not growing. If you feel comfortable, you're not in the development zone, you're just repeating what you already know how to do. The discomfort isn't a bug in the process, it's the feature, it's the actual mechanism of transformation. The discomfort is how you know you're building new capacity. And when you quit to escape the discomfort, when you walk away because staying feels too hard, you're quitting right when the actual work is happening. You're leaving right when the transformation is most active. But there's something even deeper happening that most traders never see, and this might be the most important insight I can share with you today. You're not giving up on trading, you're giving up on the waiting. What actually makes you want to quit isn't the losses themselves. It's not even the difficulty of the work. It's the uncertainty of duration. It's not knowing how long you have to endure before you see results. If I could tell you right now with absolute certainty, 12 more months of exactly what you're doing now, exactly this level of discomfort, and you'll be consistently profitable, you'd do it. You'd sign up for that deal immediately. The work itself isn't the problem. The difficulty isn't the problem. Not knowing when the work will pay off is the problem. Not knowing if you're 6 months away or 6 years away, or if it's even possible for you, that's what's unbearable. You can tolerate almost anything if you know it's temporary and you know when it ends. You can tolerate incredible discomfort if there's a finish line you can see. But you can't tolerate even minor discomfort if you don't know whether it'll last a day, a year, or forever. That's what breaks traders. Not the pain itself, the uncertainty of duration, the tunnel with no visible end, the transformation with no timeline, the work with no guaranteed payoff date. And here's what makes it even worse. Trading deliberately hides progress from you. The structure of probabilistic outcomes means you can execute perfectly and lose. You can improve massively in your psychology, your discipline, your understanding, and see no change in results for months because your sample size isn't large enough yet for the edge to overcome variance. The feedback loop between effort and results is broken. It's delayed. It's obscured by randomness. You're working hard. You're improving invisibly. And you're seeing no evidence of progress in the only measure you're checking, which is your account balance. So you're working hard, genuinely improving, and seeing no evidence. Your brain, which is wired to connect effort with results, interprets this as not working, but it's actually working exactly as it should. You just can't see it yet because probability needs time to express itself. You need a large enough sample size, and large enough takes longer than you think it should. You're giving up because you can't tolerate not knowing when the waiting ends, but the waiting ends right after the moment when waiting feels most unbearable. The breakthrough comes right after the point where continuing feels impossible. Here's the reframe that changes everything, and I need you to really let this sink in. You think successful traders continued because they believed it would work. They didn't. They continued despite not knowing if it would work. They got comfortable operating with doubt present. They learned to trade probabilistically to execute their edge consistently, while their conscious mind was screaming that this is crazy, this isn't working, they should quit. Everyone else is succeeding faster. Something must be wrong. The difference between traders who quit and traders who succeed isn't belief. It's not confidence. It's not certainty. It's tolerance. Tolerance for uncertainty. Tolerance for not knowing. Tolerance for working hard with no immediate payoff. Tolerance for the tunnel with no visible end. The traders who quit are waiting for doubt to resolve before they continue. They're waiting to feel sure. They're waiting for evidence. They're waiting for certainty. But the traders who succeed realize that doubt never resolves before success. You don't get certainty and then commit. You commit, and then eventually certainty emerges as a byproduct of success. You're waiting to feel confident before you commit fully. But confidence doesn't come before success. It comes after success. It's the result, not the prerequisite. The successful trader commits fully before feeling confident. They do the work despite doubt, not in the absence of doubt. And eventually, after enough work, after enough consistent execution, after enough proof accumulates in their own experience, confidence emerges. But it's always the result, never the starting point, never the requirement before beginning. You're trying to solve for certainty in a probabilistic domain. And that's like trying to dry off while you're standing in the ocean. It's like trying to have no doubt before taking any risk. It's impossible, by definition. You need to accept that you'll never know for sure before you succeed. You'll only know for sure after you succeed, when you're looking back at the journey. And that means the entire journey, all of it, is taken on faith, not evidence. The traders who make it aren't the ones who found evidence early that convinced them to continue. They're the ones who kept going without evidence long enough for evidence to accumulate. They stayed long enough for the law of large numbers to kick in. They stayed long enough for their edge to express itself through the noise. And here's something that might blow your mind. The moment you most want to quit isn't a sign you should quit. It's the final exam. It's trading's way, probability's way, the market's way of asking, do you actually understand probability, or were you just playing at it? Do you actually trust your edge, or do you need constant emotional validation that you're on the right track? Can you operate in uncertainty, or do you need comfort and clarity before you'll commit? Most traders fail this exam because they don't recognize it as an exam. They think the moment of maximum doubt is a sign, a message from the universe, or from their intuition that they're on the wrong path. But it's not a sign, it's a test. And the test is simple. Will you keep executing your edge when everything in you, every emotion, every fear, every logical-sounding argument is screaming at you to stop? The traders who pass this test aren't superhuman. They're not special. They just understood what was being tested. They recognized that their strongest urge to quit was actually the threshold of transformation. They saw that the voice saying, "You should give up," was their old psychology making one final desperate attempt to prevent the new psychology from taking over. And they didn't listen to it. Not because they didn't hear it, they heard it loud and clear, but because they understood it was part of the process, not feedback about the process. And here's the beautiful thing that happens once you pass this test. Once you keep going despite the overwhelming urge to quit, once you execute your edge through the darkness and doubt and fear, something shifts permanently. You prove to yourself at a level deeper than words that you can tolerate uncertainty. You prove that your edge works if you give it time. You prove that your emotions lie, that feelings aren't facts. And after that proof, after you've seen it with your own eyes and your own experience, trading becomes easier. Not easy, but easier. Because you've built the psychological infrastructure that makes consistent execution possible. So what do you actually do when you're in that moment? When every cell in your body is telling you to walk away? When the voice is so loud and so insistent and so convincing? Let me give you some concrete practices, things you can do right now, today, that might help you stay in the tunnel long enough to reach the other side. First, when you're convinced you should quit, make a deal with yourself. 3 more, just 3 more. 3 more days of showing up. 3 more trades following your plan. 3 more weeks of execution before you make any decision about whether to continue. This isn't about committing forever. This isn't about forcing yourself to trade for the rest of your life if it's genuinely not working. It's about not making irreversible decisions from your worst psychological state, not making permanent decisions from temporary feelings. The urge to quit comes in waves. It peaks and then it recedes. It's not constant. If you can just not act on it during the peak, if you can delay the decision by 3 more units of whatever you're measuring, 3 more trades, 3 more days, 3 more weeks, the wave will pass. You'll come back to equilibrium. You'll have more clarity. You might still decide to quit after those 3 more, but at least you won't be deciding from the bottom of the emotional trough. You won't be deciding from maximum darkness. You'll be deciding from a more neutral place where you can actually think clearly. Second, write down everything you couldn't do 6 months ago that you can do now. Not results, not account balance, not profit. Capabilities, psychological capacities. Can you take a loss now without spiraling into revenge trading? Can you follow your plan for 3 trades in a row? Can you sit with an open position without checking it every 5 minutes? Can you execute your entry and then walk away? Can you accept that you might be wrong without it meaning you're a failure? These are real progress. These are fundamental capacities that most people don't have. But you discount them because they're not profits yet. You discount them because you can't deposit them in your bank account. But they're actually more valuable than profits because they're what create profits over time. When you want to quit, when the voice is telling you you're making no progress, read this list. Remind yourself that you're building something real, something fundamental. that you're not the same trader you were 6 months ago. That invisible progress is still progress. This isn't about motivating yourself with positive thinking. This is about correcting an inaccurate story with actual evidence. Third, when the urge to quit hits hard, ask yourself this question. If I knew I was 3 trades away from consistent profitability, would I quit? The answer is obviously no. Of course not. If you knew you were 3 trades away, you'd take those 3 trades with joy. So then ask yourself the follow-up question, how do I know I'm not 3 trades away? And the answer is, you don't. You can't know. You have no way of knowing. So the only rational approach, the only logical strategy, is to behave as if you might be 3 trades away. Because you actually might be. This isn't positive thinking. This isn't manifestation or belief or hoping really hard. This is probabilistic thinking. You're acknowledging that you don't have enough information to know where you are in the process. You can't see the finish line. You don't know if you're close or far. And in the absence of that information, continuing is more rational than quitting, because quitting guarantees failure while continuing leaves the possibility of success open. You're not deciding to definitely succeed. You're deciding to not definitely fail. Fourth, pick a date far in the future when you'll allow yourself to evaluate whether to quit. 1 year from now? 2 years from now? Write it down. Put it on your calendar. Commit to not even considering quitting until that date arrives. This removes the daily decision of should I quit, which is exhausting, which creates constant background anxiety, which drains your mental energy every single day. You're not committing to trading forever. You're not saying you'll never quit. You're just saying, I won't evaluate this decision until this specific date. And between now and then, I'm just going to execute. The traders who succeed are the ones who remove the quit option temporarily. They took it off the table long enough for their edge to prove itself. They didn't keep it as a daily option that they had to talk themselves out of every morning. They made one decision, I'm doing this until this date, and then they stopped deciding. They just executed. And that removal of the constant decision-making is what allowed them to actually build the sample size their edge needed to reveal itself. Fifth, write one sentence and read it every morning. I am a trader who keeps going during doubt, not as an affirmation, not as positive thinking, but as identity. You're not trying to eliminate doubt. You're building an identity that includes doubt, but doesn't let doubt decide. You're becoming someone who operates with uncertainty present, not resolved. This is who successful traders are. They're not people who never doubted. They're not people who always felt confident. They're people who kept going during doubt. That's the entire identity. That's the whole thing. And every day you stay, every trade you execute despite wanting to quit, every moment you choose to remain in the tunnel instead of turning around, you're proving to yourself that this is who you are. You're building evidence of your own capacity. And eventually that evidence becomes your identity. And your identity determines your actions more than your motivation or your discipline ever could. Look, I know where you are right now. I know you're exhausted. I know you've been at this longer than you thought you'd have to be. I know you've lost more money than you planned to lose. I know you've sacrificed evenings and weekends and peace of mind. I know the voice in your head is getting louder, more insistent, more convincing every day. The voice that says this isn't working, that you're wasting your time, that you should cut your losses and move on to something else where success comes faster and feels better. And I'm not going to tell you that voice is wrong. I'm not going to argue with it. I'm going to tell you that voice is predictable. It shows up for everyone at approximately the same point in their development. It's not unique to you. It's not special feedback about your situation. It's part of the curriculum. It showed up for every trader who eventually succeeded, and they heard it just as loudly as you're hearing it right now. The only difference between them and the people who quit is that they recognized it as a developmental stage, not a message from their wise self. You're not broken. You're not inadequate. You're not missing some essential quality that successful traders have. You're not behind where you should be. You're not taking too long. You're exactly where you're supposed to be in the process. The desire to quit isn't evidence that you chose wrong. It's evidence that you're being transformed. And transformation is uncomfortable. Your psychology is being rebuilt from the ground up, and you're trying to interpret the demolition phase as failure. But demolition isn't failure. It's preparation. You have to tear down before you can build up. The edge you're developing, the psychological capacity you're building, the understanding of probability you're installing, all of that happens invisibly. It accumulates beneath the surface where you can't see it, or measure it, or feel it. And then one day, not gradually but suddenly, it expresses itself in your results. Not through slow, steady improvement, through a sudden click where everything you've been building becomes operational all at once. Because that's how probabilistic edges work. They reveal themselves all at once after enough trials. They're binary. They either haven't accumulated enough data yet, or they have. And you can't see which side of that line you're on until you're past it. You could be 1 trade away, 3 trades away, 10 trades away, 50 trades away. You don't know. I don't know. Nobody knows. And here's the devastating truth that I wish someone had told me when I was where you are. The traders who quit and the traders who succeed go through identical experiences up until the moment one group leaves and the other stays. Same losses, same doubt, same exhaustion, same urge to quit, same reasonable-sounding arguments for why continuing is foolish. The only difference is duration. One group leaves before the sample size is large enough. The other group stays until it is. You're not failing, you're waiting. And waiting feels like failing because progress in probabilistic domains is invisible until suddenly it isn't. You're measuring yourself on the wrong timeline with the wrong metrics, and then you're using those inaccurate measurements to make the most important decision of your trading career. The question isn't, am I good enough for trading? You are. The question is, can I tolerate not knowing when this will work long enough for it to work? That's the real test. Not intelligence, not talent, not dedication, tolerance for uncertain duration. And most traders can't pass that test. They need to know when the pain ends. They need a finish line they can see. They need evidence before they commit. And because trading won't give them those things, because probability doesn't work that way, they leave. They turn around in the tunnel. They walk back to the known world. And they never find out what was waiting for them if they'd just stayed a little longer. But you can be different. You can be the one who stays 3 trades longer, who doesn't make irreversible decisions from the bottom of emotional troughs, who recognizes that doubt is curriculum, not deviation, who understands that the hardest moment is the turning point, not the end point. You can be the one who keeps walking when everyone else turns around. You're not behind schedule. You're right on time. Every trader who succeeded felt exactly what you're feeling right now. The difference isn't that they felt better. The difference isn't that they were more certain. The difference is that they stayed longer. They tolerated the uncertainty longer. They operated with doubt present longer. And eventually they stayed long enough for their edge to prove itself, for their psychology to transform, for the finish line to appear. You don't need more certainty. You need more tolerance for uncertainty. You don't need more confidence. You need more consistency, despite lack of confidence. You don't need to feel better to keep going. You need to keep going until you feel better. And feeling better comes after success, not before it. You're not failing. You're in the tunnel. And you're closer to the exit than you think. Don't turn around now. Not after everything you've invested. Not after all the losses you've learned from. Not when you might be 3 trades away from discovering what happens when you don't turn around. This isn't about forcing yourself to continue through misery forever. It's about recognizing that the misery is part of the process, not evidence you're on the wrong path. It's about understanding that you're being transformed, and transformation is supposed to be uncomfortable. It's about measuring progress on the right timeline and recognizing invisible development. It's about staying in the fever while your immune system rebuilds your psychology. Every day you show up, you're voting for the version of yourself who doesn't quit. Every trade you execute properly, you're building evidence that you can do this. Every time you don't listen to the voice saying to give up, you're proving that voice wrong. And eventually, after enough votes, enough evidence, enough proof, you become that person. The person who keeps going, the person who tolerates uncertainty, the person who succeeds. Not because they never doubted, but because they kept going during doubt. If you're in that moment right now, if you're seriously considering giving up, if the voice is getting loud, if you're not sure you can keep going, leave a comment and tell me where you are in your journey, how long you've been trading, what's making you want to quit, what the voice is saying to you. Because when you say it out loud, when you name it, when you put it in writing where you and others can see it, it loses some of its power. It moves from being this overwhelming internal pressure to being just words on a screen. And maybe someone else in the comments is exactly where you are, and you'll realize you're not alone in this. You'll realize this is normal, this is expected, this is part of how it works. And if this perspective landed for you, if it shifted something in how you're thinking about your struggle, if you see your situation differently now than you did 10 minutes ago, subscribe. Because I'm going to keep making content like this, not motivation, not cheerleading, not telling you it's easy, or that you just need to believe in yourself, but honest examinations of the psychological reality of trading. The stuff nobody talks about because it's uncomfortable. The truth about what this path actually requires. The recognition that transformation is painful, and that pain doesn't mean you're failing. You're not supposed to feel good right now. You're supposed to feel exactly like you feel. Confused, exhausted, doubtful, uncertain, and that's okay. That's normal. That's right. The feeling doesn't mean anything except that you're human and you're attempting something difficult. Something that requires you to rebuild your entire relationship with uncertainty and probability and outcomes. That's hard work. Of course you're tired. Of course you doubt. That's not weakness. That's honesty. Keep going. Not because I believe in you, though I do, but because you're 3 trades away from finding out what happens when you don't give up. And that's worth staying for. That's worth walking through. More darkness for. That's worth tolerating more uncertainty for. Because on the other side of this darkness is a version of you who succeeded, who proved they could do this, who built something real. And that version of you is waiting for current you to just keep walking, to not turn around, to trust that the exit exists, even when you can't see it. You're closer than you think. You're in the tunnel. Keep walking.
You know, most traders don't lose because they can't read a chart. They lose because they don't wait for the moment when their mindset aligns with what the market is actually offering. Trading isn't about catching every move. It's about aligning with the moves that have a genuine edge. And that brings me to today's talk, the entry principle that naturally boosts your win rate. If you remember the previous video on identifying early participation from large, informed players, this builds right on top of it. Because once you can recognize where high probability behavior begins, the next question is, when do you commit without letting fear or excitement distort your perception? Now let me tell you something that took me years of internal conflict to truly understand. Every trader on the street can see a rising market, but very few can enter it without projecting hope or fear onto it. The market does not reward you for seeing what everyone sees. It rewards you for responding objectively when others are reacting emotionally. So ask yourself, how often have you taken a trade just because the move felt strong? And how often did that same strength evaporate right after you entered? That's not coincidence. That's the natural behavior of a market designed to reveal your internal imbalances. It lures you with certainty, then exposes your lack of discipline the moment you act impulsively. So I developed what I call the entry trap filter. Before I enter a trade, I ask one simple question. Is the market confirming my edge, or is it provoking my emotions? When the market is confirming, it presents clarity. When it's provoking, it creates excitement. And excitement is the enemy of probabilistic thinking. Most traders can identify a breakout. Few can distinguish between a breakout that reinforces their edge and one that simply triggers their desires. The difference, my friend, lies in patience. When you see a breakout, don't buy that first burst of energy. Let it move. Let it retrace. Then observe the nature of that retracement. Does it pull back quietly on reduced participation? Do buyers reappear before half the move is erased? That's your signal that the crowd is acting emotionally, while more disciplined participants are still in control. I always say the market reflects everything. The chart whispers it before the masses express it. Don't just read the price. Read the behavior of the price. When you can differentiate a constructive pullback from a weak, emotionally driven one, you've learned the entry skill that separates the truly consistent trader from the perpetual gambler. Now think about this. Why do most people jump in early? Because they can't handle the psychological discomfort of watching price move without them. They fear missing out. But markets don't move linearly. They surge, they pause, they shake traders out, and only then do they resume. If you wait for that pause, if you learn to sense the market's rhythm, you can enter when uncertainty is lowest and your objectivity is highest. Doesn't that sound better than chasing impulses? You see, a good entry isn't just about price. It's about the internal alignment of risk, perception, and neutrality. You want to be the trader who steps in while others are stepping back. When emotional traders panic, that's often when the more confident participants quietly position themselves. Let's take an example. Say you're watching a market trending upward smoothly. You see a breakout above resistance and a spike in activity. Everyone pours in. But what happens next? Price stalls, pulls back, and the emotionally reactive traders start to panic and exit. That's when I start to pay attention. If price holds above the previous resistance, if that ceiling now behaves as a floor, that's the market's way of saying, my structure is still intact. That's when you enter quietly while others are backing away. Remember in the previous video, we talked about identifying the behavior patterns of informed participants. Early accumulation before expansion. Well, this principle is its natural counterpart. Once you recognize those footprints, this entry method allows you to act with them, not behind them. You're no longer reacting to movement. You're synchronizing with probability. But let's not deceive ourselves. No method works all the time. You'll still take losses, and that's perfectly fine. The point isn't to avoid losses, it's to avoid psychologically fueled losses. A quality entry means that when your edge doesn't play out, you lose little. And when it does, you capture meaningful reward. That's how win rates improve. Not through more signals, but through mental discipline. Sometimes I'd track a setup for days without acting. The crowd would jump in, get shaken out, then complain about false breakouts. To me, every failed move was simply more information. Each fake-out clarified the story the market was telling. Because the market always reveals itself, but only to those who aren't rushed by emotion. You want to hear something? The most consistently profitable traders I've ever known didn't make their money by doing more. They made it by perceiving more. By waiting for the moment when price behavior, volume behavior, and crowd behavior all aligned. They weren't trying to prove they were right. They simply waited until the market showed them that the probabilities were on their side. Ask yourself, are you entering because the market is ready or because you are impatient? That difference defines the amateur versus the professional. A professional waits for confirmation, not emotional relief. He knows trading is a game of probabilities, not validation. And here's another thing. Your entry should make sense within the broader structure. Don't take a short-term setup that contradicts a long-term trend and expect consistency. Align your entries with the direction of the dominant market forces. It's like sailing. You don't control the wind, but you position your sail. When you enter correctly, you give yourself the psychological permission to hold. That's where real performance comes from, not the entry itself, but the confidence the entry gives you. You can't stay with a winning move if you're constantly doubting whether your entry was impulsive. That's why this principle matters. It creates clarity, and clarity strengthens your ability to stay. Most traders believe they need more indicators, more signals, more complexity. They don't. They need more certainty within themselves. The clearer the entry, the calmer the mind. And a calm trader outperforms an excited one every time. Now here's something most trading gurus won't tell you. Sometimes the best entry is no entry at all. If the market isn't presenting the conditions that match your edge, stay out. Cash is a perfectly valid position. The market will always create new opportunities. Your capital won't recover